Hello, everybody. Welcome to the Coach's Playbook. Today's the 28th. I actually know the date this time because my wedding anniversary is tomorrow. And yeah, in the past, I've confused that with myself. I always forget if it's the 27th, 29th. It is the 29th. Today's the 28th. Today, we're going to talk about swing highs and swing lows, which is a really important, technical pattern to be looking at when you're trying to see what trends are doing and things like that. But first, Mick, I hear you have a trader shout out for us.
I do. Big shout out to Doug Douglas. Yesterday put up $2,300. It's not the only large day he's had in his account. And also very happy to share that he recently requested an $8,000 withdrawal from his funded account. He's been growing it pretty nicely lately. So he's a fun trader to watch for sure.
Yeah, 8,000. That's a lot of money. And speaking of eights, I would be punished by my employers if I did not if I did not point out that right now we're running our 8th birthday Top Step Packages campaign. So if you're on our email list, you might have got that. If not, we have a banner on the site. Check it out. We got some good deals there on combines, resets, all that good stuff. And wow, 8 years. Mick, you've been here for most of that, right?
Close to it. Oh, about 5.5 years now at this point. So yeah, I've seen a lot of change.
Every day better than the last, right?
Yeah, I mean the team's been growing. It's been getting better. We've been funding so many more traders. It's been really nice, and getting in a little over 5 years ago, seeing a small company grow. It's been cool. Been happy to be a part of it. Learned a lot.
Cool. Well, you've been learning a lot. It's time to do some teaching. You were the one who kind of thought this might be a cool topic to talk about with the swing highs and swing lows. So, a lot of people think swing trading, they think longer term trades or position trades. In this case, we deal mostly with day traders, but it kind of applies to both. So, Mick, I was thinking maybe you could kind of walk us through kind of what they are and how you use them.
Sure, definitely. Well, I'm just to give you a little background. I like technical analysis. I like looking at the charts. It's really what I'm basing my trades off of. I think you can use technical analysis on a shorter time frame as well as a longer time frame. Unlike fundamental analysis, where it takes a lot longer for certain things to play out into the marketplace. As far as swing highs and swing lows, it's kind of interesting. Danny Hodgman's not here to be a part of this one today because what I'm about to say would be something that I think he disagrees with, actually. I would say that the two most important price points on any given trading day are the previous day's high and the previous day's low. Danny, I know we have a little bit different backgrounds. He was on the option side of things and volatility. So he likes settlement price, whereas I think as a speculative trader, previous day's high, previous day's low are the most important price points of the day. And I say that because what do you have when market's trading towards the previous day's high or the previous day's low? You have an area of inflection where you get to decide, are we going to have a range expansion or are we going to test that area and come back? So if you're trying to make a trade in the direction or catch any range expansion, those are very, very valuable points to watch. Now, not only for day trading and looking at the previous day's high and previous day's low, but you can look at a chart and see a number of peaks and troughs, swing highs, swing lows, and on a daily chart, a weekly chart, even a monthly chart, or intraday charts, if you're looking at a 15-minute hourly chart, these are important levels to be watching for range expansion potentially. And they're, when you start talking about daily charts or weekly charts, these are areas that most traders out there are looking at, large institutions. They're very important price points. And I think that, swing highs and swing lows can be magnets, whether you get, you trade through them and then you get goosed up or down one way or the other, or there's, a spike and you get rejection and then we come back into, a previous trading level. There's something that I think is very important. When we say swing highs and swing lows, you don't have to put a trade on and hold that trade playing for these swing high, swing low. If you're a day trader, be conscious of where they're at. You can always, play a trade from the long side and, get flat at the end of the day. And then the next day, get long again if you're looking for something in a direction towards a swing high or swing low. So you don't need to hold everything, hold your positions for a long period of time. If you're looking at swing highs and swing lows, you can do it. And there's many different ways to skin that cat.
Yeah. And do you guys take a looser kind of more expansive definition of what a swing high or swing low is? Because I was kind of shocked. I kind of brushed up on a few things before this and saw at least one place that was saying that there was literally a technical definition of what represented a swing high, for instance, involving a high and then two following periods that were lower. I was just familiar with it as more of sort of a short-term high or short-term low. How are you looking at those, Mick?
So I like just going by my eyeball. I don't need to go with a technical definition of what that is. I look at a chart. If there is price discovery, at the top of the chart, or price discovery at the lower end of the chart, I view those as valuable price points, and that's where I get my swing highs and swing lows from. I don't have any formulas for that, like you had just described. It's all eyeball.
Yeah, I agree with you because what you're really looking for are trends in a lot of ways. We always talk about seeing higher lows and higher highs, or lower lows and lower highs. Seeing how those swing highs and swing lows interact can tell you which way the trend's going. And a lot of
Mhm.
that is eyeballing. So, JD, welcome to the conversation. Enter
Hey,
JD. What's up?
so I'm not gonna. I agree with everything that Mick said. We're on the same page with this one. Swing highs and swing lows are definitely something that I'm always aware of. I like how they're easily identifiable on the chart. I don't get into the technical, a low followed by two higher lows. Just exactly like Mick said. You're looking for that price point on the chart, the high and the low, that are easily identifiable. I like how they can be applied to pretty much any market on any time frame. I don't have a strategy built around them. But when you factor in a couple moving averages, they can really help you stay on the right side of the market. Also, kind of depending on uh, how much time the market is spent in consolidation at a swing high or swing low level, you can sort of look at them as potential support and resistance areas down the road. I know how much we hate saying support and resistance around here, but recent areas of congestion can have sort of a stalling effect on the market when that level is revisited in a timely manner.
How much stock do you guys put into the distance between those peaks or those troughs? Are you looking for things that are happening more quickly, or is it different if you see something grinding up to a previous swing high, or what's your feeling there? Mick, you have any thoughts?
That's a really good question. I suppose I just don't have a great definitive answer for that because, you know, market conditions are so different for different products. And, sometimes you see, a market trade up to a swing high and then, it blows through it. Or, you take out a swing high from a month or 2 months ago and then it rejects. But then, the following 10 trading sessions, we trend higher off of there, a grind